Welcome to the deep dive. Today, we're digging into something pretty interesting, a data analysis project looking at a U.S. Superstore sales, specifically from 2017 right through to 2021.
Yeah, it's like getting a peek behind the curtain, isn't it? See what's really driving the business.
Exactly. And our source here is a portfolio project by Robert J. Madalo from a DQ Lab bootcamp. Looks like he used SQL, Python, and Google Looker Studio to really get into this Superstore data set.
Right. And our mission really in this deep dive is to pull out the key insights. We're talking products, regions, customer types, sales, profits, the whole picture.
We want to find those important trends, maybe some surprising facts, and figure out, where this fictional superstore is doing well and where maybe there are opportunities.
Precisely. It's about finding those actionable nuggets of information hidden in all that data.
Okay, so let's start with the big picture. Sales and profit, 2017 to 2021. What's the headline news there?
Well, interestingly, it's not really about massive growth. What the data shows is more of a period of relative stability, kind of a plateau, you could say.
A plateau, okay. So not tanking, but not exactly shooting for the stars either, in terms of overall sales and profit.
That's right. Pretty steady across the board for those 5 years.
Okay, now, if we look inside that, what's actually driving the business? Is there like one category that really stands out?
Oh, absolutely. Technology products. They consistently come out on top as the biggest contributor.
To both sales and profit?
Yep, both. Which, maybe isn't a total shock these days, but the degree to which they dominate this Superstore's numbers is quite significant. Makes you think about their strategy there.
Right. And what about the individual transactions? Are we talking big ticket items or lots of smaller sales?
It leans toward smaller sales, actually. The analysis shows most individual sales are under $5,000.
Okay.
And the profit on those individual sales, usually under $1,000.
So it's more of a volume game then. Lots of smaller transactions.
Exactly. It paints a picture of a business built on frequency rather than, say, a few huge corporate deals. Got it. Now, something else caught my eye. Potential spikes in tech sales and profit around, 2019, 2020? Yes. That period is interesting. And the analyst connects that, quite rightly, I think, to the start of the COVID-19 pandemic.
The whole work from home shift.
Precisely. You suddenly had this massive surge in demand for laptops, webcams, monitors, all that tech needed for home offices. It's highly likely that's what we're seeing reflected in those numbers.
Yeah, that makes complete sense. A huge external event driving specific product demand. Okay, let's shift gears a bit. Geography. Where in the U.S. is the Superstore making its money?
Geographically, it's pretty clear-cut. California out west and New York in the east. They're the top two states, hands down.
For both sales and profit?
For both, yes. And what's really key is that they don't just lead, they account for the majority of sales within their whole regions.
Wow. Okay, so those two states are really carrying their respective regions. What about drilling down further, like to the city level?
Yeah, the analysis does that too. New York City and Los Angeles lead the pack in total sales.
Makes sense.
And interestingly, if you look at the top 10 cities for sales overall, 3 of them are in California: Los Angeles, San Francisco, and San Diego.
So the West Coast, particularly California, really strong on overall sales volume.
Definitely. But it's New York City that clinches the top spot for both total sales and total profit. It seems to be the single most important market, especially in the East.
Why do you think those specific cities are such powerhouses for this Superstore?
Well, it's likely a mix of things, isn't it? You've got high population density, obviously, lots of economic activity, big companies, shopping centers, tourism.
Universities, tech hubs, maybe.
Exactly. Plus just high mobility, lots of people moving around. These are just very dynamic consumer markets, and that tends to translate into strong retail sales.
And it's interesting to see the other cities in that top 10 list for sales, too, like Seattle, Philly, Houston, Chicago.
Detroit, Jacksonville, too.
Right. They might not be number 1 or 2, but they clearly represent significant markets in their own states or regions.
For sure. It shows that while the biggest bucks might be on the coasts, there's important business happening elsewhere, too. Okay, so that's where they're selling. What about who they're selling to? How does it break down by customer segment?
Well, according to this analysis, the consumer segment is the big one. They generate the most sales by a pretty wide margin.
Okay, so individual shoppers, basically.
Yeah. Then comes corporate, and after that, home office.
And that lines up nicely with another finding that consumer segment also had the most active customers and the highest number of orders placed between 2017 and 2020.
Ah, some more customers, more orders leading to more sales and profit. Makes sense.
It shows a pretty clear correlation during that period.
We don't get individual names, of course, for privacy, but there's a fascinating little detail here. The single customer with the most purchases, like the highest number of SEPN orders, not necessarily the highest total spend, is apparently located in Jacksonville, Florida.
Jacksonville,
Yeah.
interesting. That was one of our top 10 sales cities, but it's in the South, which isn't the top region overall.
Right. It's a bit of an outlier.
That's a great example of how you can find these pockets of maybe really high loyalty or specific needs, even outside the biggest markets. It shows repeat business isn't just in NY or LA.
And what about the spread of other top customers by transaction count?
Yeah, looking at the top 10 by number of transactions, it's actually spread out. 4 were in the central region, 3 in the east, 2 in the south, and only 1 out west.
Only one in the West, despite California's sales dominance.
Exactly. It suggests that while the West might have bigger average sales, maybe that frequent, loyal purchasing is more distributed across other regions. Something to think about.
Definitely. Okay, let's circle back to products. We know tech wins on total value, but what are people actually ordering most often?
This is where it gets quite interesting, because while tech brings in the most money, it's actually office supplies that get ordered most frequently.
Office supplies, like pens and paper clips.
Presumably, yeah. Those everyday essentials. Year after year, they top the charts for order count. Furniture is second most frequent, and then technology comes in third.
Huh. So people are constantly buying office stuff, but those less frequent tech purchases must have much better profit margins to end up driving overall profit.
That's exactly it. Lower order frequency, but higher value and higher profit per item. That's what makes tech the financial leader despite fewer individual sales.
And within tech, what's leading the charge?
Phones bring in the highest total sales revenue. But, and this is a bit of a surprise, copiers and fax machines actually generate the most profit.
Copiers and fax, really, in this day and age.
Apparently so. Followed by phones and then accessories in terms of profit contribution, maybe higher margins on those business machines or specific B2B sales driving that.
Fascinating. Okay, on the flip side, are there product areas that are actually losing money for the Superstore?
Yes, and this is definitely something they need to look at. Within furniture, things like tables and bookcases, and also supplies within the office supplies category are actually showing negative profit. They're losing money on those items.
Oh, that's a serious red flag. Why might that be? Costs, pricing.
Could be any number of things. Sourcing costs might be too high, the pricing might be off, maybe demand is low and they're sitting on inventory. It definitely warrants investigation.
Right. Okay, let's talk discounts. Everyone loves a sale, but how do discounts affect the Superstore's bottom line, according to this data?
Well, the data shows a really clear and maybe slightly worrying pattern. A lot of sales volume happens when discounts are pretty steep, like in the 30% to 60% range.
Okay, so discounts drive volume. That makes sense.
But that high volume comes at a cost. Those same high discount levels correlate directly with significant losses in profit.
Ouch. So they're basically buying revenue but losing profit margin.
It certainly looks that way. They're sacrificing profitability to move units when those discounts get really deep.
Is there a specific point where it's worst?
Yeah, the absolute peak in sales volume actually occurs with a 50% discount. And that 50% discount level also represents the biggest hit to profit, the largest losses.
Wow. That really suggests that relying too heavily on deep discounting isn't a sustainable path to profit.
It strongly implies that, yes, they need to be careful about how and when they use those big discounts.
And if we cross-reference these product subcategories with the customer segments, does the consumer segment dominate everywhere?
Pretty much, yeah. The consumer segment is the top buyer across most product subcategories.
Okay.
And the specific products that sell most frequently within those subcategories also generally bought by the consumer segment. It just reinforces how vital that group is.
Makes sense. Finally, did the original analysis identify specific products, like actual product names or models that were the absolute best performers for sales and profit? We don't have them listed here, but...
Yes, it seems the full report did pinpoint those star products.
Yeah.
The ones that consistently brought in the most sales and the most profit.
That kind of detailed info would be gold for managing inventory and marketing, right?
Absolutely invaluable. Knowing exactly which items are your winners lets you make much smarter decisions about what to promote, what to stock, maybe even what features to develop further. Those products likely hit a sweet spot of good volume and healthy margins.
Okay, great. So let's try and wrap this all up. If you had to summarize the key takeaways from this whole deep dive into the Superstore's data, what would they be?
All right. First, geography matters. The East, especially New York and the West, particularly California, are the core markets. That's where the big money is.
Right. Key regions.
Second, the consumer segment is king. They drive the most sales and the most profit. Understanding them is crucial.
Consumer focus. Got it.
Third, technology products are the engine room. Top for revenue, top for profit, even if not ordered most frequently.
Tech is critical.
Fourth, we saw that overall trends in sales and profit, at least from 2017 to 2020, tracked pretty closely with active customer numbers and how often people were ordering.
So customer activity drives results.
Yep. And maybe a fifth point. Focusing future efforts on those high-density, high-activity urban areas we talked about seems like a sound strategy.
And building on the tech point, it sounds like maintaining the quality and service for those technology products, especially for consumers, is absolutely vital for keeping things positive.
Couldn't agree more. That seems like a cornerstone for their continued success. Product quality, good service, especially in that high-value category and for that key segment.
Okay, so here's a final thought for you, the listener, to mull over. We saw that big discounts, especially around 50%, lead to major profit losses even if sales volume goes up. So the question is, what could the Superstore do differently with its pricing strategy? How could they protect or even boost their profits without killing sales volume, particularly in those crucial consumer and technology areas?
That really is the million-dollar question, isn't it? Moving beyond just chasing sales figures to thinking about sustainable, profitable growth. It might involve rethinking value proposition, maybe tiered pricing, loyalty programs. Lots to consider.
It's definitely something to think about. Thanks for taking that deep dive with us today.
My pleasure.
We'll catch you next time.